What is your assessment now? What the key drivers are behind markets in this part of the world, at least?
Well, good morning, Tom, Yvonne. Thanks for having me today. So I think, this really interesting trend that we've seen in markets last week. I mean, you have this situation where we went into last week expecting what we have heard so far from the Fed to be supportive for the market. But into the end of the week, evidently what we have seen is that kind of sell-off cutting across the U.S. market. But towards the end of the Friday session, I think, you do find a situation where investors still went in and stepped in and bought the market once again. So we did find a bit more of this moderate declines cutting across the U.S. market. And of course, I think as Yvonne mentioned, the start of this week itself, we are seeing Asia markets, slightly holding on to itself at this point of time. So my take on this, I think, really is one that there's a little bit more of this localized adjustments in the tech space so far. We have the equity market, with especially these concentrated gains in the tech really going a little bit too fast to furious, and that kind of adjustments come by. The spillover, I think, across the other asset classes, including some of the havens, I think it's a bit limited, and that's why you are seeing Asian markets taking this, I would say, still in a bit of a positive light, awaiting the Chinese data update over here. But I think, broadly, this is just really a bit paring back of the overtly bullish kind of trend in the market so far, Tom.
Does that then suggest that you expect to see a continuation of what we've seen in terms of a modest rotation into those reopening stocks? Does that continue, do you think?
Yeah, well, so Tom, I think, there is a little bit of this, I will say a little bit of this inflection point perhaps for the market. I think what we have seen so far really, I think, is kind of slowly grappling with the kind of uncertainty over COVID-19 uncertainties. And I think resurgent cases certainly been compelling us to continue going for this COVID-19 winners. But, I think, what we have seen even to August, I think the kind of surprises you continue to get with data, whether it's in the U.S. or cutting here across to Asia, at least, especially across some of the North Asian economies with the PMIs. I think that's really just going on to suggest that, the recovery phase is still underway. Definitely, I think, there is some concerns, and we won't rule out the possibility of this kind of momentum waning a little bit, especially after the initial burst of reopening across the globe is coming. Well, that kind of effect may be wearing off. But I think, what would be the next leg forward, and I think really confirms the kind of forward-looking market kind of trade so far, into the next phase of recovery. It's a little bit more towards more broad-based recovery for the economy. Evidently, there's still a lot of uncertainties as we discussed, but I think, that could really be a bit of a shift that, the market continue looking towards with the kind of macro backdrop so far, Tom.
So, Jingyi, how do you pair that to a VIX that's stayed elevated for some time now? How long can we stay above 20 for the VIX? And what does that tell you about future equity returns? Is it a sign of perhaps a deeper correction ahead, too?
Yeah, well, so Yvonne, certainly I think the VIX trend have been pretty much very interesting for us observing the market, the kind of moving in tandem with regards to how the equity markets have been in, I would say, in the past week itself, come across as quite a bit of perhaps a surprise as well. To a large extent, I think, that itself, with alongside what's happening with some of the option market behavior, has been seen as just really a bit of a kind of expected reaction. But I do think, that being said as well, the situation, I think, perhaps isn't so much different from what we have seen perhaps earlier in June as well, where we have a bit of a market kind of adjustment. So I would say that, with that being the case, I think, it wouldn't come as a surprise that people continue to seek a little bit of protection just really in the short term before, I think, as the next phase of recovery, as we talk about with the more broad-based situation, help to see a bit more of this tapering off of the hikes with the VIX. Run.
Yeah, you mentioned about the options market. There's been reports that we've been tracking with SoftBank, reportedly the NASDAQ whale that's been fueling this tech rally in the U.S.
Yes.
This is quite a controversial move. How do you see this changing the investment landscape for you? Is the market more prone to these big pullbacks that we saw last week?
Yeah, so, well, Yvonne, definitely, I think this kind of observation, particularly with what SoftBank has been doing, I think, comes across as one that it's really marking a kind of market view towards the tech stocks really continuing to be the one to lead the way for COVID-19 winners. I think that this kind of trend as well, not just, I think, with respect to what SoftBank have been doing, but I would say generally cutting across the retail side of things, you do find this kind of situation as well as the call options really getting picked up. So I think in the short term, I think just this kind of short-term volatility that we shouldn't really be ruling out, and which is why I would say, really still increasing a little bit of exposure to the VIX, and especially as a sensible hedge in this case as well. But, that being said, it's kind of reality in the market we have with the kind of uncertainties we still probably will be grappling with at least for the next 6 months to a year.
Jingyi, what is the market reaction if we don't get additional fiscal support out of the US?
Tom, I think definitely that's one high on the list, and especially into this week itself, I think we'll be looking towards more of these discussions as Congress get back into action. I think, the market reaction so far, I think, has been trading along the line of seeing to the expectation that we are going to get that fiscal stimulus coming through before the election. My view, of course, is still one aligned with this as well. I don't think, really either side will want to really jeopardize the situation before the elections. And I think, even as we get a lot of the headline numbers on the unemployment, for example, coming through, to be a surprise, I think, diving a little bit deeper as well, it's still one suggesting that the U.S. market evidently still require that continued fiscal monetary support in place. So I think on the end itself, that's kind of market situation. But, as you asked, I think definitely if that doesn't come by, I think it's going to really be a little bit of a dampener for the U.S. economy. It's going to see a little bit of this shock perhaps to the market to some extent. And perhaps, really I think in my view, it's still going to reinforce the kind of difference between the COVID-19 winners and those that are, perhaps expected to be a bit more beneficial with this kind of extra fiscal support. But, as
Sure.
Really coming back to the point, I do think that it's really something that we still expect to see before the U.S. elections come by.